Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here based on the request of one of our members to discuss more about what is mean by deferred revenue, and we are going to take into consideration of the one real life example, and based on that we are going to discuss in depth about deferred revenue. You can say that R2R dive deep. So we are going to dive deep into deferred revenue to get a more insight about that. What is mean by deferred revenue? How it's going to be the work with the real life example. In addition to that, by taking into consideration of the one example, how the journal entry is going to work towards the deferred revenue. That's all in depth we are going to discuss here. So request all the viewers to be a part of our membership to get an exclusive benefits from there. 80 plus content we have already been uploaded over there, and continuously we are uploading the more. In addition to that, you are able to get a scope to ask us to create a content as per your requirement and request. So in addition to that, if you guys are looking for any sort of training related to accounting and finance, then you can connect with us on our email ID accounts.gurukul@yahoo.com. That's for exclusive hands-on training that drives results. So we'll jump towards that to know more about what is mean by deferred revenue and how does work with real life example. So the first thing is that we need to know what is mean by deferred revenue. So the deferred revenue is recorded as income, but haven't yet earned by providing goods or services. Once those have been provided, deferred revenue is then recognized as earned revenue. So this is again in line with your accrual concept. What's mean by accrual concept? So it means that as and when you earn the revenue, it means as and when you deliver the goods, provide the services, transfer the ownership, transfer the risk, then only you have the right to recognize that as an revenue. So accounting standard, that's revenue recognition 09, explain more about this when we have to recognize the revenue. So here as well, if you have raised any invoice for future period, then what you have to do with that? Giving example here, one is that this is a real life scenario. Invoice date is 26th of December 2024. Item descriptions, two items added over here. One is license for 5 years. Second, that's a warranty for 5 years. License for 5 years is 20 quantity, 37,500 is a rate, and total amount is 7,50,000. Same towards the warranty. That's the quantity is 20. Rate is 15,600. IGST is over there. And the total basic amount is 3,12,000. Now, if you see here in this invoice, this license is provided for the 5 years and rate is 37,500, and this is the basic. So we have to do the focus towards here on basic amount, not on the taxes. Same for the warranty. We are raising the invoice of 5 years. 15,600 is the rate, and the total basic value is 3,12,000. The day when we raise this invoice on 26th of December 2024, have we delivered the entire services to our customers? No, we haven't delivered that. We are taking the commitment that this license is going to be for 5 years and warranty is going to be for 5 years. So we are there to support you for next 5 years towards these licenses and warranty. And as per our accrual concept, we have a right to recognize the revenue as and when we delivered the services, provided the services, as and when that's on the revenue, not on the date of raise the invoice. It means here what we have to do is that when we are doing the closure as on 30th November 2024, whatever is pertaining to that month from 26th to till 30th November, we have to keep it in the books of account as a revenue, and the rest we have to transfer towards the deferred revenue. This is the exactly opposite concept of your prepaid expenses. If something is prepaid expense for you, it means for your service provider, that's a deferred revenue. So deferred revenue is a liability. We have to provide the services in the future. That's the commitment. That's a liability on us. Either we have to provide the services to him, or if we receive the payment, we have to refund to our client. So in both way, this is liability for us. So deferred revenue is going to park in the balance sheet as an liability. Now, when we have this invoice, when we raise this invoice in ERP, what entries triggering in the systems, and when you have to do the reclassifications or month end entry from revenue to deferred revenue, how you're going to do for that. That's all we have to discuss in practical. So we'll jump towards the Excel to know more about this. But the one thing is that the deferred revenue is a liability, and as and when we deliver the services, we have right to recognize that as an revenue. So the moment you raise the invoice on 26th of December, your this entry is going to taken care by your AR team. So AR team is doing this entry in the system. So when they raise the invoice, might be the system is automatically going to do the entries that your customer account is debit to your revenue account credit, and the amount is going to be the 7,50,000 plus this 3,12,000. That's a 10,62. Now if you see, this is your receivable, that's correct. If it's a due date is 1 month from the invoice date, we are going to receive the payment, and that's as a receivable in the balance sheet. But from this sides, this revenue, we have booked this entire amount in the P&L as a revenue. But either this revenue is pertaining to only for this November or financial year 24-25, or this is belongs to the future 5 years. As per the terms, this is going to be for the 5 years. So we can't treat this entire amount as a revenue for us in 24-25. And when we have the every month close, so what we have to do from R2R is that if this is going to be for 5 years, so it means 365 into 5. So this is going to be for 1,825 days. Then how much is going to be for 1 year? This is going to divide by the per day or per year. You can do that. If it's a days wise calculation, the per day is going to be 581. So if you do this into 365 days, this is going to be this much. And if this is into 5, it's 10,62,000. Okay. So 581 per day. And how many days is there in December? 26th of December 24 to till 31st of December 24. Then 6 days you provided the services in the month of December. Then how much is going to be for 6 days? Then 5,81 into this 6 is going to 3,491. And how much total we credited to the P&L? 10,62 less this 3,491. So it means that 10,58,508 is going to be deferred revenue for us. And these calculations we have to do in deferred revenue schedule. And we have to keep that calculations ready as an schedule. So that's going to be matched with your balance sheet. And every month we are going to take the entry for that. So as on 31st December 24, R2R R2R is going to take the entry in the systems is that your revenue account is going to debit to your deferred revenue account is credit, and the amount is 10,58,508, 10,58,508, and this deferred revenue is going to hit to your balance sheet as an liability. Then how much is amount is going to be pertaining to for 1 year? That's you are going to be treated as an current liability, and the remaining, which is going to be for the 5 years, that's going to be treated as an non-current liability. So that's the way you have to do the calculations for the deferred revenue. And if you see towards the revenue is that your revenue is here. Initially, it's credited to the P&L for 10,62 from the accounts receivable, and you have reclassified that towards the deferred revenue. So net 3492 is credited towards the P&L, which is pertaining to only the 6 days revenue. When you are going to jump in the month of Jan, again you have to do the same calculations. Giving example here is that if it's a per day 581 into 31, so 18,039, then you are going to debit your deferred revenue and credit to your revenue account. So every month, then you are going to do the booking of the revenue. And this is going to be the one of the entry for next 5 years. You have to keep a track of this and do the entry in the system. So this is the concept about your deferred revenue with real life example. And this is about your deferred revenue. So this is the way you have to take the impact of deferred revenue in the books of account. This is one of the important concept towards the R2R. And we have discussed here based on the one request or a comment from one of our viewers or one of our members towards to know more about deferred revenue. So thanks guys for being with us, and request all the members to start to ask to create the content as per your requirement. We are here to create the content based on your requirement. So leverage this membership, ask us to create a content as per your need and enhance your skills. In addition to that, if you guys are looking for any sort of training related to accounting and finance, you can connect with us on our email ID accounts.gurukul@yahoo.com. Thank you.